Yeah, especially if you're a real estate agent and you have to work Saturday and Sunday, or at least Saturdays. But anyway, it's all good. Homes are still flying off the shelf. We're doing 123 a day now. We were way down at, I think we were in just the low hundreds in the beginning of the month, and now it's shot up. So gives us 20 days of inventory, but we listed 145 homes yesterday. So that's the good news. Yes, we love the good news. $1 million homes, 4 a day, getting to where we were last year within a quarter of a point. So I'm sure that's going to end up, maybe we'll sell more than 4 a day. You never know anymore. With the shifting market a little bit. Investors still hanging in there, still taking advantage of the increased cash flow because of the increased rents. And today we're going to listen to Ivy Zelman, and she is an analyst, a real estate analyst, who really has her hand on the pulse of the market. So let's see. Oh dear, hang on. So the other thing I wanted to talk about before we get to her is crypto. Now, let's put this up here. A lot of people, are curious about crypto, don't know what to do. And here is my advice. And I want to show you this little video that I've got, and it's about the future of money is here. Now, I told you all that I signed up to become a certified crypto agent, and I haven't started the class yet. I mean, I listened to maybe the first 10 minutes of the first video, and it's set down in several. The courses has several different topics and their videos. The gal that does it, Natalia, is, I won't say difficult to listen to, but for me, she's a little bit monotone, and I'm used to the Jimmy Dag and all the action and what have you. So, but I'll get through it. I almost was thinking of revving it so that I could just read the transcript, but I'll probably learn. She probably has charts on there and things, but how did I get started? Well, I got started because I decided that I was going to, I guess Gary Vee got me started. And so I signed up for this app called Coinbase. You can go to coinbase.com or you can go to the app. And so today we're going to just show you the very basics. This is a very basic video. Now this video assumes that you've already created your account with your password, and you've already put in how you're going to buy Bitcoin, whether you're going to buy it with your credit card, whether you're going to buy it from your bank account or PayPal. I think those are the three options. So assuming that you go in and that doesn't cost anything to do that. So it's just a sign up. But this particular video assumes that you've already done that. So we're going to watch this quick video. It's I don't know if it's even a minute long, but let's just watch it. And I'm going to go ahead and get started.
Everyone, the purpose of this video is to show you how to buy the Pro token on Coinbase.com. For purposes of this video, we're going to assume that you've already created a Coinbase account. If you haven't, you're going to go to Coinbase.com and hit the Get Started tab. But this video is going to assume that you've already created an account and you're ready to buy the Pro token. So what you're going to do, go to Coinbase.com and you're going to click Sign In. Once you're in Sign In, please input your email and password. For added security, highly recommend using an authenticator app when you do the sign-up process. So in this case, I am going to put mine. And from here, we go to the main Coinbase.com dashboard. This is where everything's going to take place. All your assets will be here, and whatever you want to buy and sell that's on Coinbase will be here as well. So again, purposes of this video, it's going to assume that you have an account and you already have added some sort of bank account balance, linked your credit card, linked your checking account, whatever the case may be. So with all that said, if you want to buy the Pro token, all you do from here when you're on the dashboard is you go to the buy and sell button. You click buy and sell. And in this case, you'll be able to buy any of the tokens you will like. It's normally pre-populated with Bitcoin, but if I just want to go to Pro, I'm going to hit this arrow. I'm going to select the asset. I'm going to type it in. Here it comes. Pro token. And from here I have the option of either putting the amount of USD value I'd like to buy a Pro token or the amount of Pro itself using this arrow. But in this case, say I want to buy $100 worth of Pro token. I'm going to type in 100. I'm going to pay with whatever account I have set up, bank account, credit card. I'm going to preview the buy. And this will confirm how many Pro tokens I would be receiving for $100. And all I would do next is hit buy now, and that's it. Once you do that, Pro tokens will be delivered into your account. All I would do next is hit buy.
So, that's how easy it is. And you'll notice that they did take a small percentage of your buy for their fee. Just like, many of the stock trading companies do that. Let me turn myself off here. So anyway, so what I did, now I didn't buy the Pro token. That's one thing. I just went under Bitcoin. I put in a couple $100, and Bitcoin, I think at the time I bought was like $30,000 for a coin. But you can buy like $100 worth or $200 worth or whatever it is that you want. You don't need to buy a whole Bitcoin. And I think that was some misconceptions. So you can do that. And then you can buy an Ethereum. There's a couple other companies there. One company is building a platform for Ethereum to make blockchain easier. And so I bought a little bit of that stock, and it was like 62 cents a share. So I probably bought $100 worth. But anyway, it kind of gets you at least familiar and over the fear line. Then you're not afraid of, purchasing. You see how easy it is, and you see that one little step. Just take $100. You don't have to, take a big amount of money. So I would suggest that you do that because, whether we like it or not, crypto is here. And like I said, I have signed up for the certified course. We'll see. I'm interested in being able to simply explain it simply how it works with real estate, because they've already done one transaction on propy.com. propy.com, propy.com. They've already done one blockchain transaction with a purchase, a residential purchase in New York, I believe it was. So anyway, let's get on today with the main event. And there is this lady out there, if you don't know her, Ivy Zelman. And Ivy Zelman is quite an analyst when it comes to the real estate industry in particular. So I clipped about 10 minutes of her telling us a little bit about the market and from her perspective. And she's someone who gets her information from owners and, the actual people with boots on the ground, as she says. So without further ado, let's start. Her show is longer, and I just took a tidbit of it. So let's listen to her, and then maybe next week we'll listen to another tidbit of her, because if you listen to it all at once, it's almost overwhelming. I'll just tell you, because she's very analytical.
That you'd say, I'm really worried. But, the best way to cure inflation is just at some point keep raising prices, and at some point the consumer will push back. So,
Yes.
but the consumer's not the only buyer right now. That's the problem. I think you've got multiple buyers, and the primary buyers having that trouble competing.
So before we talk about the investors, because, I'm seeing the same thing. You're obviously much closer than I am, but one of my clients has an account where he's buying 75 homes a month in Phoenix. He has it I won't name the fund, but it's, it's significant. And now he's getting two more, let's just call it MSAs, Denver, and I think the other one's going to be Dallas. And in each one of those marketplaces, they want to buy 75 houses a month. But we're going to get into that. But I want to stop first and say, what about the normal everyday homeowners? Are we still seeing migration patterns? What's causing that seller to sell today? I go back to like John Burns stuff around super seniors, or the move up, trade up, homeowner who wants to get to that next level in terms of housing. What are you seeing from a trend standpoint that my client should be paying attention to? Who's going to be selling next?
Well, I think that the boomers and Xers are taking advantage of lifestyle changes. And, as the boomers are reaching, arguably retirement age, and they're in the 60s, and they have tremendous equity, the pandemic has really fueled or created sort of a catalyst to maybe push them into a co-primary or dual property situation. And that's been migration in from the North and the Midwest to the South, a new thing, by the way. It's been going on for decades. If you went back and just looked at the data that we have, that's 100% sample size from the decennial survey, just go back to 2010 and look at that data. The blue states are growing at best, kind of low single digits, where the red states and, if you want to call it smile states, growing, double digits. So that divergence is not new. What's happened in the last 2 years with the pandemic is it just magnified it. And the biggest winners are no income tax states, whether Florida, Texas, clearly Nevada,
Tennessee, yeah.
Tennessee, and those are benefiting from a sharp increase in sort of the boomers taking advantage of an arbitrage. The arbitrage is, with rates that troughed at 2.65, could I sell my expensive, Northeast house that now I can finally sell at a price, in the suburbs of New York that I was never going to see. Now I can get that price. I can go to the South anywhere, have a way better cost basis and lower taxes. So we're seeing that migration continuing. I think that there is some, signs of some places it's starting to cool, like in Utah, where it was on fire, and then Boise. So I think that trend won't change. I think that the secular tailwind is, as we age and our boomers are just as big as our millennials, the difference between the boomers and the millennials is that the boomers increased from the generation before them by 53%. The millennials were a 14% increase for the generation before them. So they're both about the biggest size, but everything has to be rate of change. We can't ever look in absolutes.
Yeah.
So as incremental boomers are aging, they're going to be contemplating selling their homes, downsizing, looking for dual properties, and the Xers are right there with them. But the size of the Xers, which I'm an Xer, you're an Xer, maybe, I think you're an Xer.
Yeah,
so
51.
You're an Xer. So the Xers and the boomers combined have also accumulated a great amount of wealth. For those that are exposed, even if it's just through their 401k, we've had a 30-year tailwind of the stock market. So there is a lot of opportunity, and the boomers and the Xers are also helping their children, their millennial children, and they're giving them the down payment. I thought it was interesting. Redfin came out and said that 25% of the purchases, I believe in 21, were used from the stimulus checks that they were given. So young adults that would otherwise have not been able to buy got stimulus money, 25%. And then Redfin said 13% used their cryptocurrency gains to buy homes. So we have had maybe more incremental buying because people have been flush with cash. What I'd like to watch and try to appreciate is when that cash is diminished, whatever incrementally it's coming from, and that starts to become, as I said, it's not exactly a headwind, but when you reverse a tailwind or you eliminate it, and in essence is a headwind, And so we'll see where consumers come up with the down payments, which they were struggling with at least as a first-time buyer. I think that on the good news for the existing homeowner, once again, is they've had so much equity accumulation just in the last 2 years, and looking at the actual dollars, it's almost $4 trillion of incremental equity that's been realized. And so, will you unlock that equity by contemplating selling? Well, if it makes sense for you because you have a great arbitrage. Mm-hmm. So is everyone is a shuffleboard of the United States going to go berserk, and everyone's going to go from the north to the south, or the Midwest to the Southwest? I think that starts to moderate, because I think the people that can do that, for the most part, they'll still do it. So just the question is, will it sustain at these elevated levels, or just moderate back to where we were and what we were doing? So that's something I think about. I do think the first-time buyer is the loser in this, because, when you look at the rent inflation, it's so egregious. It's so egregious to the consumer. And the prospective buyer who would otherwise want to save is now going to be spending a lot more of their income on non-discretionary parts of what they have to spend, i.e. rent. So the primary buyer is the loser in all this, really. But
I was going back to inflation. It's like I wrote down the notice, we're at a 40-year high of inflation. How do you see this impacting the rental market broadly? And you're exactly right. People that are paying rent are, I think, in more trouble than the person that's trying to save money to buy their first house, and there's no inventory for them.
Well, I think what ultimately happens is that we'll force consolidation. We'll force consolidation of households, because people cannot continue to pay the rents, and everything else is going up in their lives. I mean, renewal rents, they have what's called loss to lease. I don't know if you've heard that terminology. So there's a gap between the renewal and where move-ins are. And people are getting notices to get them to market, and they're forcing them to have to find alternative shelter. And that's like maybe more evident in the Class B product, but we're seeing stress in the market, and you're going to see evictions rise. You're going to see foreclosures increasing. You're going to see delinquencies rise. We're already seeing it. So what we all forget as a nation is that prior to COVID, housing was, just okay. Right. And it was really a tale of two markets. But now that we've had consumers struggling with down payments, consumers struggling with too much debt. And so that kind of all went away. And so that's why when you snap your fingers and 2 years later, what's really changed? Mortgage rates went down. Right. The government flushed the system with cash and liquidity and money, and gave you checks like from the sky. We were raining money. And what do people do? Well, I'm not going to pay my mortgage. I'm not going to pay my student loan debt. I can go buy a house. So take that out of the system, and what's left? We have a primary buyer who, by the way, at the end of 2020, in the fourth quarter, the number of renters converting to homeowners skyrocketed from quarter to quarter. We went from a trend line of, call it 2+ million, 2.3 million a year renters convert to owners. And it got to 2.85 million nearly in fourth quarter of 20, which would look like a hockey stick. And then it stayed elevated for another quarter or two, and then is now back to like 2.45 million. So it's still trending above where I guess historical trend line would be. But that moderation in the renter converting to homeowner is either suggesting one of two things. They can't afford it anymore, or they're still buying. Obviously 2.4 is above the trend line, but it's just not as robust, or they just can't compete with cash buyers. Because in the cash market, year over year, 2-year stacked purchases, over 40% of purchases are made with cash. On an annualized basis, the NAR just reported 27% in the January closing data, whereas mortgages were down 13%. So your primary buyer is moderating in the face of acceleration in investors. And that's really the dynamic that we're faced. And even if the builders provide more shelter in the third ring of the market, and they're bringing on, quote unquote, a first-time buyer product, you've got to, deal with what is now a much more significant level of inflation to buy that house today. And I do think that rates matter. I never think about absolute rates. I think that it's a rate of change. And what does it do to the monthly payment? So as of the fourth quarter of 21, with home prices up as much as they were, and rates not even yet up, the monthly payment on average for a first-time buyer using FHA mortgage and assuming, none of the incremental costs of property tax, and we do incorporate insurance, homeowner insurance was running up year over year 17%. Right now, year to date, we're up more like 25%. So it does matter.
Yeah.
But the good news for the consumer that can get a home, if we are actually going to remain in an inflationary environment, they could be a winner unless we start to see that the demand on the investor side really peters out for various reasons that we can speak to. But I'm an analyst that understands what the investor impact will be and how much of it's investors, and I can tell you more about the investors. I understand what the primary buyer is doing. What I never can get my arms around is what's going to turn the investor sentiment and when. And that's the only way we can, obviously think through the potential reasons, but to actually time that right one, it just is not something that I think that any of us truly understand, because the alternative investments in the world we live in right now are not compelling. And until they don't get their return, that's when they'll probably continue. It's only when they hit the wall. And when do they hit the wall is the question.
So I'm being mindful of your time, but I got 4 questions I got to ask. And we're touching on one, which I want just your insight on investors. You touched on migration patterns, and the note that I wrote behind it, you're talking about back since 2010, blue states versus red states, single digit versus double digit. My second question is, where do we get this information? If an agent's listening right now, or a team leader or a broker's listening right now, let's just start easy. What are the go-to sources to get the kind of information that they could be more educated to create better content, inform their buyers and sellers? Let's go info first.
Well, everything, you have to just go to zelmanassociates.com.
Thank you very much.
Read our newsletter and read our blogs. And if you want to purchase research, you can also do so. But, we rely on, our secret sauce is really more owners and operators.
Yeah.
So we rely on C-suite executives, not public. We watch what they're saying, but we really are relying on the people with boots on the ground. And then we have that married with lots of data that's available, publicly available data. And we do have some proprietary data that we aggregate and have some AI and things that we are utilizing. So I would say it's a secret sauce that, unfortunately not everyone can replicate, but the government provides a tremendous amount of data that is accessible and is available to anyone. And looking at Census Bureau data, reading the decennial survey that came out, anyone can access that.
Yeah. So listen, everybody, I am...
Okay, so that is just a snippet of the hour-long interview, and she had she addressed many issues. The one issue that I wanted to listen to today was where are the sellers coming from and where are they moving to? And what we see is the trend to states more than ever that have low or no income taxes. And one of the other things that she highlighted was the Phoenix market, for instance, is going to probably be one of the first markets that has a correction, and Austin as well. And I think even Dallas. I think she named those 3 cities. Oh, and the Carolinas. They're going to have the first correction, and possibly because they had the biggest increase. So because they had the biggest increase in pricing, they probably are going to feel the correction when the interest rates go up. When the interest rates go up, they're going to feel the correction first. So that makes sense. I think we're not far behind. The good thing is that what she's saying is, well, but Nevada is one of those states that has no income tax. So that has a bearing on us sustaining our influx of people moving here and the market staying pretty steady. Now we will have, I believe we're going to probably have a minor correction, but we shall see. I'm going to play another snippet of hers next week. Very important about the investors. And the one thing I will tell you is at some point, what she's saying is the investors are going into real estate because the other markets aren't compelling. And what she's talking about is, right now or especially with the war, with the war, I mean, we don't know what's going to happen with the stock market. I see it go up, I see it go down, I see it go up and down and up and down, and we really don't know what's happening with inflation. How much of the inflation is really caused by the war? I don't think that's why we have inflation, even though that's what we hear out of the White House. I really believe that it's been a long time coming with this current administration. That's my opinion, and not much I can say about it, but I think that inflation is going to affects everybody across the board. But we'll see how this war goes and how that affects our market. Again, we have no income tax. We are one of the lowest property tax states in the top 10 of low property taxes. I think our insurance rates are a little bit high, not as high as other parts of the country that have weather that causes their insurance rates to be higher. Anyway, lots of good information and insight into where we're headed. And again, we find ourselves in uncertain times in this real estate market and in the world. Just like with the pandemic, we didn't know what was coming next. Now we have a war going on. We have inflation reaching 40-year highs. We have prices increasing in real estate. We're up to $450,000 for the medium priced house in Las Vegas. And as she said, as Ivy said, it's not the first time home buyer pretty much out of the market. However, we have the millennials now that are buying homes. We have the Gen Xers and the baby boomers who have money. The equity that we have in our homes and other areas where we've gained money over time. One good thing about age, huh? So the thing I'm trying to say is that we are a very rich society right now, and I really believe that's why they're printing money, because they don't think inflation's going to hurt us, because we all, as they say, they think we're all cash rich. And yes, maybe your home value has doubled. And what I would tell you, the equity in your home has no economic value. Get it out, refinance, take that cash out. That's what I would tell you. As she said, there is no foreseeable in the next 5 years as far as she'll go out. There's not going to be any foreclosures. They'll say, well, the foreclosures doubled. Well, they went from 1 to 2. Across the United States, there's 2,000 foreclosures, and that really hasn't changed over the years, except for, what is it, 7, 8, and 9? If I have those 3 years correct. Yeah, we had record foreclosures, but we've gone back to normal foreclosures in the United States. And now that we all have equity, even if you refinance, you're going to still have equity, because you're not going to be able to take all the money out. But if you maintain at least 30% equity, we're pretty secure in our real estate industry. And plus 40% of homeowners own their homes free and clear. That's an incredible number. So all these things, go into Ivy predicting, or at least discussing, what's going on in the market. And we shall see. I could go on about this because it's, of course, this is what I do. I love all the things, but I want to share with you real quickly. We do have a class coming up on Monday, and it's from 2 to 5. You can Zoom, or you can come into the classroom. We always have food and refreshments. So Monday afternoon, 2 to 5, ethics. What do you think? And of course, Jimmy Dag makes it fun to learn. So come on in and join us. You go to bee.vegas to sign up. We've now changed the page so that you can sign up to multiple classes. If you sign up for multiple classes and then you want to change, that's no problem. Just email us and we'll move you to the class that you need to change. So there's no issue there at all. If you want to, one thing I forgot to mention here, ZelmanAssociates.com, sign up for Ivy's newsletter. And we are actually on Agent Formula's blog, we are going to put the whole interview. We are allowed to share it, and I think it's very insightful information, very good news for people moving to Nevada, very good news for people that live in Nevada, especially Las Vegas. I love you all. I'll see you tomorrow morning at 9 o'clock. My daily shows have gotten a little later because I'm back to the fitness center early. So I've got a half an hour less time than I used to have. So anyway, I love you all. Have a wonderful time. Thank you for, joining me. And please comment if you're watching me on YouTube, subscribe to my channel. Love to